Today I'm joined by Travis Jamison, co-founder of CapitalPad. Travis and his team are building what looks like a compounding machine. They've already completed 10 acquisitions, and they are not thinking in tens. They're thinking next in thousands. And in this episode today, we dig into the story behind CapitalPad, how they source and structure deals, what they look for in operators and independent searchers, and what it takes to set the target as ambitious as 1,000 more deals. Thank you for doing this today.
Mr. Marcus, it's a pleasure to be here with you.
So let's start from the beginning. Why does CapitalPad exist, and where did this idea come from?
So I'm a bit of a serial founder. I had about probably about a dozen companies over the last 17 years, something like that. And I found that always the best companies that I created were scratching my own itch. And this was very much the case with CapitalPad. I'd had several liquidity events over the years, the different companies I owned, and became more of a capital allocator and was basically investing in a variety of different asset classes. I was very active in the venture space, which I no longer am. I was playing in a real estate LP, all these different things. And then basically found my way back to what I call the small business space. And small businesses, thinking $30 million and below enterprise value. So not that small, but I fell back into the space, realizing that I liked companies with real profits and that weren't dependent on massive growth to have good outcomes. So kind of fell into originally the kind of the search fund space, and then after that, kind of the independent sponsor space. But realized really quickly that as an individual, it's quite difficult to even get access to half of these deals, right? You can get access to some of the searcher deals, but the independent sponsor deals, which I consider to be mostly superior, if you're not writing a 7-figure check, you're just not getting access. And even if you can write that, you probably won't get access. It's really much reserved for mostly family offices and some SBICs. And I really wanted in this because I saw what some of these deals were. They're great. So we decided to build a platform around that to solve that problem. So I came at it from the investor point of view. I want to get access to these deals. I want to be able to diversify between these deals. So, maybe I can write that big check, but I can't write 20 of them. And so CapitalPad was kind of born out of that. At the same time, my co-founder, Donza Warden, he's a former private equity principal who's now an independent sponsor. He saw it from the opposite end of the view. As independent sponsor or as a searcher, you do all this work to find this deal, and now post LOI, you're on the clock, right? You've got your 60 days to close a deal, and now you have to get all these investors, and it's an investor roadshow, just like when a company goes public, except you don't have all these people, investment bankers working behind you. So from his perspective, we're well, we can build it so the investors and the sponsors meet. And through that, it just becomes a better system for both parties involved. And that's CapitalPad was born out of that. And we're really thrilled with it. I use the product myself. I've invested in every single deal we've done.
That's nice, man. Let's maybe, could you walk us through the platform? First, when it comes to investor, and then when it comes to independent searcher, just to get an overview of how it works and how simple and smooth it is, because again, 10 successful acquisitions, you've definitely, as we discussed before the show as well, there is definitely this product market fit you've accomplished. So maybe, first investor side, then independent searcher side.
Yeah, I like to think it's fairly easy on both sides, at least getting off the gate, getting into the surface area stuff. As an investor, basically, you have to apply to join. Obviously, only for accredited investors. We have some other application criteria. And if it's approved, then investors get access, right? They hop in, they answer a few questions, and they get to see a list of available deals at any given time. There's usually not many. So frequently, there'll be one. I think at the moment, we've got 2. Sometimes there'll be 0. The reason for this is that we are heavily curating the deal flow. It's not an open platform. Sponsors can't just bring their deals and place it on there. So investors through there, we've standardized basically a lot of the deals. So if you've looked at many of these deal memos before, they're all over the place. They kind of rhyme a little bit, but there's no structure. We took it and structured the entire thing so you can compare deal to deal and kind of see and get a feel for, what does this deal look like compared to others. We've done sponsor interviews, the NDAs, the data room, all this stuff is on platform, so it's much, much easier. And then if investors are interested, they just request an allocation right there on the platform. From the other end of the view, the sponsors and searchers, they come and they just submit their deal. It's not overly complicated, assuming they've already done the work. If someone's already put together a deal memo or a SIM, well, it's much, much easier. They submit it there, and then that goes to our deal team. We start evaluating it, and if we like what we see, then we start going deeper. It's not just, hey, we like it, approve. We start having different phone calls, start doing our diligence, start looking in, but that's kind of the start of it.
Now, after the first 10 deals, if you can say what broke, what worked, what did you have to change, improve, and what's next when it comes to the next maybe 5-6 months?
We've learned so much, and sometimes when you're just like so deep in the weeds of it, you might not even remember it all. But the things that are standing out is, one, these deals always take way longer than expected to get off the finish line, to get these closed. And that's sometimes awkward. So maybe an investor requests an allocation, and like 2 months later, we call the capital and send out subscription agreements. Like that's weird. And we don't really have a solution for that right now, other than raising like a fund, which we're not really aiming for at the moment. So there's that. Of course, along the way, the investors are getting updates and stuff regularly, but it's still kind of an awkward situation. There is always the rare investor that just kind of disappears, right? It's been very low amounts, but it scares us every single time we go to call the capital. And thus far, I've just backstopped it myself. We've had a couple little small people fall out. Like, I just cover that gap myself. Obviously, if it's a giant check, I can't do that all the time, but that's worked out so far. I think so much of it is also education. It's crazy. We just updated the kind of the tech stack and the back end of the platform recently. And in doing this, we were thinking through fresh eyes of what like the onboarding would be like. And we realized we've had this platform up for a couple of years, and we never really told people how to use it, which is kind of bananas, right? So that really probably ostracized like a large majority of the users. So if a user is coming on and they've got experience in the space, maybe from private equity, maybe they've bought and sold a few businesses, like they get it. But a lot of the people probably didn't, and so we're just now like building intro videos and stuff, like explaining how the deals work and all this stuff. Which I'm kind of embarrassed to admit to. That's what it was.
Okay. Now, there are many investors listening. Without revealing confidential info, what's a healthy deal on the CapitalPad looks like in numbers?
What do you mean in numbers?
I mean, maybe the size, how much capital you're trying to raise per deal.
I don't look at it like that. So the size isn't as important to me as long as it's over like a threshold of being meaningful. If a company is doing 300K EBITDA, there's just nothing to play with, right? There's no margin for error. There's nothing for salaries. It just doesn't work. But assuming it's there, we're more looking at like the quality of it. So when I let's go back to like how I look at my own portfolio. I want to own a piece of a diverse portfolio of small businesses, lower middle market companies, this type of thing. And I don't necessarily care if I'm 1% on the cap table or 20% on the cap table. All I care about is, my share of that. And so when we look at these deals, it's the same thing. We're really just looking at what is the quality of it? What are the risk factors associated with it? What's the disruption risk is probably one of the biggest things. That's really what we're looking for. Not as much like, are they raising 2 million or 5 million? That doesn't concern us as much. Obviously, the more of our capital they'll take, the better. But that's not the first thing we're looking at.
Now, and when it comes to the data and the investors, how many of them are, if you can say, like repeat investors? You said that you have invested in all deals. What about the others?
There's been quite a few, actually. Many of our like very first, 50 investors are still there, doing quite a few of the deals. I don't know if anyone's invested in all the deals like I have. I think I'm probably the only one, but we've had some that have definitely invested in a majority. So that's a great sign.
And what about those independent searchers? How do you vet them? Like, because you are this, what is the right way? Gatekeeper who you're letting in. So how's your process? What do you look at? What's the background search? Everything.
It's probably changed some over time. So technically, we do work with searchers, so self-funded searchers, as well as independent sponsors. Over time, it's shifted more to the independent sponsor space, which is probably an interesting thing to even chat about, just because I think the searcher space, some of the quality has gone down. Actually, you want to chat on this? This is probably interesting. So the searcher deals, the self-funded searcher deals, the SMB Twitter, we can put it that way. I think just even 2 years ago, there was just so much gold in them hills, as Donza likes to say. And I think there's been so many different like influencers and stuff like that. Not you, you're the good influencer, but like the people shilling courses and whatnot. And not all the courses are bad. Some of them are good, but there's just been so many searchers pop up, and the searcher buy box is fairly rigid, right? You're looking at like SBA loan, maybe 8 million, maybe 10 million tops enterprise value, but usually below that. And so many of these deals they've been looked at by 100 different searchers. A lot of the searchers coming on are not as sophisticated as they once were, right? A lot of them at one point had some sort of background that made a lot of sense, and now it's not as much. And to be clear, I think there's probably still the same amount of good deals happening in the searcher space. There's just a lot more noise around it. So we're still very open to searcher deals. We just haven't seen as many good ones. But now we've shifted more to the independent sponsor deals. And for people who don't know what that means, like, I didn't at one time, independent sponsors it's essentially private equity, just deal by deal. A lot of times it'll be a small team of people. They frequently will have private equity experience, although not always. They've gone out on their own. Sometimes it's just one person, right? Fairly sophisticated person, but usually there's more than one. And these deals are a bit larger. So you might look at a $20 million independent sponsor deal. The economics are a little bit different. They're better for investors, actually. But through that, it's kind of changed what we're looking at. To go back to your original question, it's easier to get to know a sponsor, an independent sponsor, more because they have this huge background, this huge track record most of the time. They know how to get deals done. They know how capital stacks work, how looking through the financials. They kind of get all of this stuff, which is definitely not always the case with searchers. It's more difficult with that. And I understand these are difficult things to do. And so in that case, we're able to start looking at the deals themselves a bit more. Although with looking at the searchers and sponsors both, looking at character is probably the top thing we're looking for. Like, are these, we're going to be married to these people essentially for a while. Like, are these people that we like? Do we trust? Do they have answers to the right questions? And do they also not bullshit us when they don't have the right answers? It's totally fine and prefer to say, I don't quite know. Let me get back to you. And they get back to you the next day with like a great answer. Like that's the type of thing that we like to see. It's just really kind of judging quality, which is a difficult thing. You can't put that into a checklist necessarily.
Have you yourself becoming a better investor, you think? Because you see so much data, you talk to so many searchers.
Absolutely. So I don't come from the finance background like so many others in the space. So I come in it very much from the entrepreneurial background. I founded a dozen companies. Many of them did quite well, larger and larger exits. So I know this, but there were so many things that I didn't know. I mean, even when we got into CapitalPad, started building it, I was better at that point, but I didn't know the things that I do now. Now, it's essentially just reps, right? You look at a few dozen deals a month, you see how they go through, you close a lot of these, you just get better and better along the way. And also to give credit to my partner, Donza, he's been just a fantastic person to just absorb through along the way. Because, Donza has so much real world private equity experience at more to the upper end. But besides that, he's just a very knowledgeable, thoughtful individual. And, I don't think I've met many people that have read as much as him. So he's kind of a special guy there.
Why I was asking this question was maybe just encouraging those people, again, accredited investors who are not maybe professional investors, but maybe they are in tech industry, maybe they are entrepreneurs like yourself, to just maybe sign up and look at those deals, because there's so much they can learn. Because I've been just surfing on this platform, and you share so much data, and you can simply learn so much because there are different deals there. So that was the idea for me to ask this question.
Yep. There's so much to learn. So many industries I've never even thought to think of, didn't even know existed that pop up. And those are frequently my favorite ones, by the way. The niche ones you'd never in a million years imagine that exist, and just print money and don't even have a website type of thing. Those are just beautiful things you see all the time.
So, but what about those accredited investors? How they should think about illiquidity when they make those investment decisions?
I think this is a really, really important point. And I think sometimes newer investors will get themselves in difficult situations here. Like definitely these types of deals are not the first things people should be doing, right? Having a very good like equity portfolios, I think pretty important. Or something just, you can't eat unrealized gains, right? And even more than that, it's not like you just can't take it out. You can't even take out your principal. So these are, on average 5-year journeys. So a person very much needs to have enough cash to weather storms, enough like liquid investments if things ever happen. So that their entire portfolio shouldn't be made up of these things, in my opinion. I could see the argument if somebody's young and wealthy and has like no debt, no family, no anything, like fine if you're playing a long-term game, but it doesn't really align with me. Now, with that said, these types of deals, just private market deals in general, are well over 50% of my portfolio, well over, which some people would not agree with, but I think I have enough liquidity on the remaining parts that like I sleep just fine. So maximize like long-term wealth.
Not giving here investment advice, but when it comes to this investment thesis, investment strategy, what's your maybe thought when it comes to someone coming on a platform wanting to just the one best deal versus someone who's like building a portfolio, doing a lot of different deals, like maybe smaller tickets? What's your take maybe on this?
Let's think back to private equity. And, a lot of people like to crap on mega cap private equity right now, but these are really sophisticated players. And, in a fund, they might have 10 different portfolio companies. And these people are sharp and they're going to have losers still, right? And so if you think of that, how is it that necessarily an individual without that training would be able to necessarily pick the best one? Maybe it's possible. I feel like I've seen several that I'm like, this is just so hard to lose. But, things happen. We saw in COVID too, how many of these companies that bulletproof, right? Like something happened. So it's not how I would approach it. Like I would build the portfolio, right? What's diversification is the only free lunch to investors.
Okay. Now, and some words for the searchers. Again, you've seen a lot. You have a lot of data compared to maybe someone else who doesn't have this platform. What do the top 5%, top 10% of sponsors do differently during the race, who successfully raise, versus the ones who maybe struggle?
Constant communication, really. That's really it. Touch points. So if you go back to, let's say like even e-commerce or something like that, I forget the stat, but you've heard that people need to have, say, 7 touch points before they will buy a product, before a sale happens. And the more time they can touch, whether that's, seeing an ad, like visiting a blog, whatever. I don't know how it works. It's probably similar here, but it's less necessarily about those touch points to get someone to invest, but more to like keep them engaged. Like the engagement is everything. And to see progress along the way. That's a huge one, because when you start the raising process, everything is not done at all, right? You start getting allocations and then you're still moving along. Maybe the QAV is not done, going to the purchase agreement. There's always lots of negotiations back and forth, lender stuff. There's a lot to work with. And so for investors to be able to see the progress, to see that you're handling things, you're solving problems, I think that's invaluable.
And now if you, again, based on your experience, if you had to advise the searcher to do maybe 2, maybe 3 things to become CapitalPad fundable, what should they be doing?
I don't think there's any hacks, unfortunately. I was trying to think of something, but be an outstanding individual and have an outstanding company. that's basically, and be buying it at a attractive purchase price, attractive economics. You just can't fake that stuff.
Okay. And for closing, when someone's listening, a accredited investor, super interested, would like to learn more, at the same time, a searcher, where should they go? What should they do?
It's really simple. Just go to CapitalPad.com. You can sign up, go through the flows. Accredited investors can apply. Sponsors, searchers can submit your deals. It's not overly complicated. And that's the point, right? We're trying to make this asset class a little bit easier for individuals to invest. And definitely on a deal-by-deal basis. I don't think there's really any other ways to do it outside of like funds and whatnot.
Okay, Travis, this was 20 minutes well spent. Thanks a lot for building this platform. Thanks a lot for sharing how you've been doing and how you're yourself thinking about investing in this asset class. So again,
Thanks so
a lot,
much.
man.
I appreciate your time.